Hey guys, welcome back to another week of Mortgage Matters in Minutes. I'm your host, Brent Rasmussen, and this show is sponsored obviously by Mortgage Specialists. So today's question we've been getting quite often here again is, why did my payment go up? Why did my mortgage payment go up? What's going on? And it's a common question that we see generally every year. Your mortgage payment will go up. And we're going to talk about that today, of what part of your payment goes up. So the first question we ask our clients, and what we spend much of our time doing, is handling clients as a fixed rate mortgage. I would say it's very rare these days for someone to take an adjustable rate mortgage. So if the mortgage payment is fixed itself, that payment will never change. It's a fully amortizing loan, meaning as time goes on, the balance is going to go down to zero. And I would say here in our office, over the last 10, 15 years, we've done very few adjustable rate mortgages. I mean, obviously on a couple hands, we can name as many as we've done. And we remember those clients that are wanting an adjustable rate, and possibly we went through the education to explain to them why it's good for them. So generally speaking, your payment does not go up because of your mortgage payment changing. It's because of your taxes and your house insurance. So what we always like to ask our clients is, have you received a new insurance statement or a new tax statement stating that your payment for those have gone up? And I would tell you 99% of the time, the reason why people's payments have changed is because their property taxes or the assessed amount has increased. The tax levy always stays the same, but since your value of your home has increased, so do your property taxes. And then with your home value increasing, the rebuilding cost or replacement cost of that home is also a higher number. So if your house is worth more and it burns down or somehow gets massive destruction to the property and it needs to be replaced, the cost of those goods obviously are always higher in the future than they are lower. So because of those two items, generally your payment will continue to go up. We see that happen in large spikes, and then it kind of evens out a little bit of time. But the one thing that you would want to pay attention to is, every year by federal law, a mortgage lender must send you an annual escrow account disclosure statement. It's a lot of words, I know. It's called an annual escrow account disclosure statement. And I'm going to go through and show one here for you today, just so you have an understanding that before that mortgage lender changes your mortgage payment, they have to let you know, hey, what did we do? How do we do the math, the calculations to make the formula come out properly? And sometimes the lender might not have the accurate information. Or sometimes the county comes out with a number and changes the number. And again, it's just a matter of getting the right facts to the right individual. So we're going to quickly pull up this annual escrow account disclosure statement as an example purpose. This happens to be one from Citizens that we use quite regularly with our clients. And they're going to send you a statement. It says, hey, we've looked at your escrow account, and we show that your beginning balance is $868, and maybe your beginning balance to be required should be $2,100. They're saying, hey, based on our review, you have a shortage of $1,243. So many people aren't aware, if you write a check of $1,243, they can put that right in your escrow account and your payment never changes. So me personally, I like to keep my payment pretty much the same every year, just because. There's no rhyme or reason why. But if you make up that $1,243 as a one-time payment, you're good. Your payment stays the same. Or what mortgage lenders are going to tell you is, hey, in order for you to make up that difference, we can spread it out over time. So they're saying in this example, while my payment is $2,439, or this example is $2,439, now my payment, or this example, will go to $2,650. So you can split up that and divide it over time and have that money each month go in your escrow account statement. So how do they do the math? So on the second page of the statement, they're going to say, you pay this much in every single month, and throughout the year, we're going to pay out for taxes and your insurance. So they're saying, hey, we are scheduling to pay out about $12,000 over the next year. But according to what we set up last year, only $11,000 goes in there. So the difference of those two is that $1,200 that needs to be made up before next year, so you don't get so far behind that your payment skyrockets up. So they're going to give you this math. They're going to say, hey, your taxes we estimate to be this, your insurance estimates to be that. Right here on top, we're saying insurance estimates to be $3,400, taxes estimate to be $92.35. So as long as those numbers are accurate, this formula that they're giving you is a federally mandated disclosure, meaning it can't change. It can't give out their own disclosure. The government says this is the format that you must give the consumer to show why their payment has increased or decreased. Let's say, for example, your insurance or your taxes lowered or went down. If that was the case, your payment would lower accordingly. But I would say generally in my experience, taxes and insurance do not lower, do not go down. On the third page of the escrow account disclosure, they're going to state again how much goes into your payment every single month for escrows, how much gets paid out at the end of it, and that should wash everything out accurately. So this is what they're saying. They're saying again on the back page, hey, your new payment will go to this, but if you make up one large payment on the first page of $12.43 in this example, you don't have to worry about your payment increasing. Do we always like this happening in our lives? No. I mean, obviously, just like anything else, cost of goods goes up. That's inflation. Inflation is usually a negative word, but just like everything, the value of your home is increased. So if you went to sell it, it's going to be worth more. So now the county is saying, well, if your house is worth more, we're going to tax you more. And insurance, as we see more hailstorms and more claims being had, and the value of replacing that home is higher, they're also going to charge you more often. So is the mortgage company really changing your payment? No. Taxes and insurance are what's causing your payment generally to go up. Where, of course, if you have an adjustable rate mortgage, the numbers are different, and they would send you out an annual disclosure that states, here's what your payment is going to change to if that rate does adjust. But a majority of the time, people have a fixed rate payment. And if you read through these disclosures, it'll tell you what's going on. If you don't know how to read the disclosures, that is okay as well. We have many of our clients reach out to us and say, hey, I don't understand how to read this. Can you help me understand what's going on? And of course, we read through these things and say, here's what's going on. Is this number accurate? This number accurate? Yes, yes. And you're in the correct situation. The lender is going to be increasing your payment accordingly to make sure there's enough money for tax and insurance. The biggest time this happens is when people build a new house. And many times they only collect for lot taxes, which are very cheap. And when the house gets fully completed and fully assessed by the county, then the payment jumps up dramatically. So that's a big time occurrence that we see when people get really stressed and it's not what they were expecting, because they would assume, hey, my taxes went up $500 or $1,000 a month. My payment should go up by just that much. But in essence, they have to collect for a whole year in advance and the future year moving forward as well. So again, as long as you get this escrow account disclosure statement in the mail and you contact a mortgage professional like us at Mortgage Specialists, we can help guide you and answer your questions to get you the correct answer of where exactly and why did my payment go up. I hope you learned a little bit here today. We believe in education very highly at Mortgage Specialists. We're always here to help answer any questions that you may have. You can reach out to us at 402-991-5153, or you can check us out on our website at mtg-specialist.com, where we have many, many blogs that give you many, many types of education to your questions that you may have every day. We all hope you have a very great rest of your day, and we'll see you here next week, same time, same place. Mortgage Specialists. Driven, trusted, reliable.